I think the next crisis that could happen before Trump leaves office will be much worse than 2008. Everything that Trump is doing is bad for the dollar. It's all a giant pump and dump scheme. The reason that Donald Trump is saying this stuff is to pump up the valuations of crypto-related businesses that his friends and family are heavily invested in. They are unloading all these overpriced shares and tokens on the gullible American public who are foolish enough to buy these things. It's a giant fraud. The Fed is not only not delivering the rate hikes that we need, they're about to deliver rate cuts that we don't need. The end game is runaway inflation, maybe hyperinflation. It would officially make the United States the world's largest banana republic, just without the bananas. I expect this next move to carry gold, up into a 5-digit number, so above $10,000. There's no question that the world is headed back to a gold-based monetary system. It's the only monetary system that's ever really worked.
Welcome to the Microscopic Podcast presented by GoldRepublic. My name is Alexei Joranov, and in this format I invite you to look at the world through different lenses, to see what's hidden in plain sight. I hope you will get fresh insight and enjoy this conversation. If you do, as always, please give it a like and subscribe, but also leave your actions down below in the comment section and share it to those who need to hear this. But before I start, I'd like you to know that if you open an account at GoldRepublic, you will receive 1 free gram of gold. Just click on the link in the description. Today, I have the pleasure to welcome on the Microscopic Podcast one of the most outspoken and unapologetic voices in finance, Peter Schiff. Peter is Chief Economist and Global Strategist at Europac, Chairman of Schiff Gold, founder at Schiff Sovereign, and host of the Schiff Radio, and obviously best-selling author. For over 2 decades, Peter has warned that America's debt-fueled economy, hollowed out manufacturing base, and fiat monetary system would end in crisis. Now, with gold at all-time highs, inflation sticky, and de-dollarization accelerating across the BRICS world, that moment may have arrived. We'll dig into why Peter believes this collapse is uniquely American, not global, why central banks are quietly replacing treasuries with gold, and how you can prepare for what he calls the greatest financial reset in modern history. Welcome to the show, Peter. It's an absolute honor to have you.
Oh, thanks for having me on your show.
So the first question that I ask every first-time appearing guest is the following. What is your most heretical view about the monetary system?
Well, I guess if you're going to describe it as heresy, it's more heresy to the conventional wisdom, because I believe that in the monetary system that was established by the framers of the Constitution, and if you understand the Constitution, they have very limited powers were given to the federal government. They only have the power to coin money and regulate its value. And by coining money, they mean take gold and silver, which is the only metals which the states are authorized to make legal tender. The federal government is not authorized to make anything legal tender. So all legal tender laws have to come from the states. And the states can only make gold and silver legal tender. And all the federal government can do constitutionally is take that gold and silver and establish coins and affix the various weights and measures. And they could define how much gold and how much silver is in a dollar, and they can coin dollars. But they have no authority to print paper money and call those dollars. That authority was not given to them by the Constitution, and it was prohibited to the states. So the purpose of the Constitution was to prohibit any form of paper money from being issued by any government, whether it was the federal government or the state government. So I believe in those principles, and I think we should go back to them. I think there's going to be a lot of discussion about Fed independence and whether that's constitutional or not. I think the whole concept of the Fed is unconstitutional, but the concept of the federal government doing what the Fed does is also unconstitutional. We need monetary policy, or money needs to be separated from the government. All they can do is coin it. They can't create it.
You've just alluded to that independence. How would you describe that relationship today?
Well, I think it's much too cozy. I've always believed that Fed independence was more of a pretense, because I believe that behind the scenes, and sometimes even not so behind the scenes, you had the Treasury Department and the Federal Reserve working together hand in gloves. And I don't like that. I think to the extent we're going to have a Fed, and I'd prefer that we didn't, but to the extent that we do, it needs to be truly independent, which is why it was established as a private corporation. The Federal Reserve was not set up to be part of the U.S. government. It was completely separate. But at least when it was originally set up, all Federal Reserve notes that they issued had to be backed by gold and silver. They had to have real lawful money behind their notes. But that doesn't exist today at all. There's nothing behind their notes. They're just fiat. But I think what's happening now with the Trump administration is they want to tear down even the pretense of independence. And the Supreme Court may, in fact, help them do that.
So how is that possible? You just said that it would be anti-constitutional, and now the Supreme Court, who is basically the guardian of the Constitution, enabling it.
Well, the Supreme Court, I don't think, is going to enforce the Constitution to the degree that it should. So the reason the Federal Reserve is independent is because the Constitution doesn't give the U.S. government authority to print money. Now, I don't expect the current Supreme Court to recognize that. They're not going to overturn 100 years of history of paper money. I don't think, I mean, they should do that, but I don't believe they will. So I think what they will do is say that the concept of an independent Fed is unconstitutional and that the government needs to have more control over the Fed. That's going to be, it's like two wrongs don't make a right. Just because we shouldn't have a Fed doesn't mean that the president should get to control it. But I think that's the direction that they're likely to head, is say that there's nothing in the Constitution that authorizes a fourth branch of government, and therefore the Fed must come under the purview of the existing branches, and it can't really have this independence because the Constitution never provided for it. I think they're willing to make that ruling. I don't think they're willing to rule that the Constitution doesn't give the federal government the power to create money, to print money, which is what the Fed is doing. So I think we're going to get a decision that actually results in a worse outcome than the one we have now. I mean, I would rather have an independent Fed conducting this policy, even if independence is partially an illusion, versus just having the federal government exercise this unconstitutional power directly. That would be even worse, because inflation would be even worse if the government was directly in charge of the printing press.
That would be kind of akin, and correct me if I'm wrong here, but kind of what we see in banana republics, right?
Yes, it would officially make the United States the world's largest banana republic, just without the bananas.
So if we go further down that path, because there was been not rumors, but suggestions that Scott Bessent would basically merge the Treasury Department with the Fed in a way, and that would have disastrous consequences for the credibility, I guess, for those institutions, but most especially for the dollar.
I mean, I think if this plays out that way, it's not going to play out well for the dollar on the global stage. The dollar is going to get clobbered. Everything that Trump is doing is bad for the dollar. The tariff policy, the big, beautiful bill, the disaster that he's doing with Fannie and Freddie Mae, what he's doing with the Fed. I mean, it's probably the worst combination of policies that I've ever seen under any presidential administration. So if your goal was to destroy the value of the dollar, the Trump administration is most likely to succeed more than any other administration I've seen.
But wasn't it part of the strategy of the Trump administration to lower the dollar and make it more affordable to also refinance the huge amount of debt that is about to be refinanced this year, next year on? Or is that
No,
all a miscalculation?
no. I mean, Trump doesn't want the dollar to go down. I mean, he's threatened other countries with sanctions and tariffs if they don't prop up the dollar. So he understands how important a strong dollar is, but he doesn't understand how his own policies are going to substantially weaken the dollar. But the consequence, by the time Trump finishes his term, we're going to be in such a massive disaster as far as runaway inflation and the economy and interest rates. I mean, long-term interest rates. I mean, everything that the administration is doing is going to blow up and have adverse consequences, severely adverse consequences. And it's going to basically roll out the red carpet for the next Democratic president, who will be very, very left wing. I mean, like an AOC Bernie Sanders type. That's what we're laying the foundation for, because Trump will succeed in destroying the Republican brand. Worse than George Bush did, much worse than, because the financial crisis that he created or helped create, the Fed was the main architect, but he was there. But I think the next crisis that could happen before Trump leaves office will be much worse than 2008. And that's what laid the foundation for Obama. And Obama was a bad president, but whoever follows Trump will be even worse.
Okay, so it's going pretty much downhill from there. If we now look at what you've been warning since I think more than a decade or even more, you tell me, about the U.S. financial collapse. Something has shifted. Gold is surging to all-time highs. Bond yields keep rising to alarming levels in the US, the UK, France, Japan. The dollar looks super shaky. Official CPI inflation prints are also very sticky and expected to rise. Is that the moment you've spent 20 years preparing for? Your critics say that you've been early, maybe sometimes too early. What's different this time? And why shouldn't people dismiss this as another false alarm?
Yeah, well, first of all, while gold's hitting record highs, silver is still, 20% or so 20 from its record high. So it's got a ways to go. But yeah, gold got above 3,570 yesterday. It's pulled back a bit today, but it's still about 35.50. And silver is hanging out now above 40. It got above 41 yesterday, back below 41 today. But certainly when it comes to gold, I wasn't early. I mean, I started recommending gold in the late 1990s when it was under $300 an ounce. So, if you bought it back then, it's more than 10 times what it was. And I've been constantly telling people over the last 25 years to own gold, and gold has outperformed the U.S. stock market over those 25 years. So following my advice on owning gold has been correct. Now, there was a period of time, about 10 years, where the price of gold went sideways. And so during that time, people started to say, oh, you see, Peter Schiff is wrong. Look, gold's not going anywhere. They forgot how much it went up before it went sideways. And now it's not going sideways anymore. It's going up again. And so I expect this next move to carry gold, up into a 5-digit number, so above $10,000. I don't know what the first digit is going to be. I mean, it may be a 1, it may be a 2, it may be a 3. I mean, it's a moving target. But the price of gold is going a lot higher. So too will the price of silver. So people should be buying it. Because all of the reasons that I laid out 25 years ago for buying gold and silver, all those reasons not only still exist, but they're stronger than ever, because the underlying problems that we had 25 years ago have simply gotten worse over the past 25 years, much worse, right? And so the case for gold and silver are stronger than ever, which is why people should, buy it. Don't think I've missed the boat. It's too late. It's not even close to too late. So that's why, I've got Schiff Gold. If anyone wants physical gold and silver, don't even wait for the end of this interview. Just pause it right now and go buy some, because the longer you wait, the more expensive it's going to be. So you go to schiffgold.com and just load up your shopping cart and check out. Or we've got specialists standing by if you need help.
if we look at more the problems that you've been, so the let's say first part of my question about the current situation of the bond markets, because the yields are, as I mentioned earlier, surging everywhere and to alarming levels. We had now recently the 30-year U.S. Treasury one that also flirted with the 5%, for example. The long end of the Japanese bonds too, and also very high levels. When you look at that, is this now really confirming this sovereign debt collapse that a lot of experts, you including, have been warning for a few decades already?
Yeah, I mean, I think it's pretty obvious that a sovereign debt crisis is coming. I mean, one of the reasons that Donald Trump publicly admits for the Fed to cut rates is because the U.S. government has so much debt, and it's a burden to service the debt at the current rate of interest, and that the Fed needs to lower rates to bring down the cost of servicing our debt. Well, that's, really an admission that the debt is unsustainable. I mean, we obviously can't repay it, but Donald Trump is saying we can't even service it. We need lower rates. But that basically is what's going to be the catalyst for the crisis, because our creditors, the lenders, don't want to lend us the money at the lower rates. They need higher rates to compensate for the risk of the, depreciation of the currency and inflation. And if we're going to tell creditors, we're not going to pay you a high enough interest to give you a real return and compensate for the risks you're taking of having your principal and interest debased, well, they're not going to want to buy our debt. And there you have a sovereign debt crisis. There's no buyers for our paper except the Federal Reserve. But when the Federal Reserve buys U.S. government debt, it has to create inflation to do it. So when you have a debt crisis, you have an inflation crisis, and you have a dollar crisis. And that's going to be far worse than the garden variety financial crisis we had in 2008.
Now, if we look at the Fed policies and the fact that we expect a rate cut in September, we also see that August saw its biggest job cut since 2008. Is this also one of the onsets that you think is this double-edged sword, where on one side the Fed wants to lower rates to preserve kind of what's left of the economy, but on the other hand, giving a free way for inflation?
Yeah, well, I mean, first of all, the economic data is not reliable at all. I think the unemployment rate is only low because of the fraudulent way it's being measured. Even if you took the government's own official U6 number, we've got about 8% unemployment, which is high unemployment. U6 is far more accurate than what they report, but even U6 sugarcoats it. So the real unemployment rate in this country is well north of 10%. So we have high unemployment. We have a weak labor market. In fact, we have an even weaker labor market today than what we had a year ago under Biden. But on the flip side, inflation is getting worse. At least in the last few years of the Biden administration, the trajectory of inflation was down. Not because Biden was doing anything about it, just because we had a big spike up and then we kind of drifted back. But now you have the trajectory rising. We have strengthening inflation. So inflation is stronger and the labor market is weaker today than it was a year ago. But rate cuts are not justified just because the economy is weak. We need rate hikes because inflation is strong and getting stronger. But the Fed is not only not delivering the rate hikes that we need, they're about to deliver rate cuts that we don't need.
So if we continue this way, which numbers of inflation, because you just said that government statistics are not to be trusted, which, let's say, sources or ways do you then measure the real rate of inflation?
Well, I look at just the money supply and credit, because credit growth and money supply growth, that's what's being inflated. So that's what you look at. But if you want to just look at the consequence of inflation, one consequence is prices going up, you need to look at the prices themselves. You can't look at government indexes that purport to measure those prices, because those indexes have been engineered to come up with a low number. That's just how they're designed. So it's not that people get a high number and then they fudge the numbers. The methodology, the computational formula is designed to reduce the increase. So if prices actually went up by 5%, the CPI might report they went up by 2.5%. Right. So what I would suggest is don't look at what the CPI claims prices are doing. Look to the actual prices and see what they're doing.
Clear. And I think there's also even websites that lets you calculate your own personal inflation on many levels. But so if we're about to cut rates, if the Fed is about to cut rates into rising inflation, what's the end game?
Well, the end game is runaway inflation, maybe hyperinflation. And I don't know how long it might take before the Fed reverses course and tries to correct its mistakes. If it connects its mistakes to the outcome that they're observing. But I think right now, I mean, Trump is all about political expediency. So it's not about what's good for the country. It's what's going to make his image appear better in the short run. And, the other thing he's concerned about is making money for his family and his friends and his donors. So he does things that may lead to personal gain rather than the best interests of the country.
Is that why you think that with the Genius Act, like the new Stablecoin Act and all this crypto policies that's been implemented with first the Bitcoin strategic reserve that shifted into a crypto strategic reserve, is that something that you think is linked to that? Or why do you think those policies have been implemented?
Yeah, I think that all of the attention to crypto has got nothing to do with the crypto industry being an important industry or America needing to lead the world. I mean, why the hell would we need to lead the world in digital Ponzi schemes and pyramids? This is all a fraud. The reason that Donald Trump is saying this stuff is to pump up the valuations of crypto-related businesses that his friends and family are heavily invested in, and the tokens. So it's all a giant pump and dump scheme where the pumpers now are the Trump administration, and the dumpers are people close to the administration or within the administration, donors to the campaign or friends of the president or family members. They are unloading all these overpriced shares and tokens on the gullible American public who are foolish enough to buy these things based on all the hype that is being generated by the Trump administration. So it's a giant fraud that's being pulled off on the public by the government. So I've never seen anything like it, and I think it's a disgrace.
So you could actually frame this as a Trump and dump scheme.
Yeah, using the White House, using the U.S. government to pump up what's being dumped.
Clear. So now if we look at the tariffs that have been implemented in the past months, it's still not clear on some of fronts, for example, India, China. Where do you see this factoring into this whole inflation question?
Well, I think the tariffs, add to the inflation problem by undermining the global demand for dollars, by making the U.S. less important in global trade. I think the tariffs are helping to drive China, India, Russia closer together and strengthening their ties. I think it's enabling China to increase its ties with Europe, with South America, even with Canada. So I think the U.S., takes a smaller role, and so that diminishes the dollar's status. It also diminishes the idea that foreigners need to prop up the dollar by buying our treasuries and, to enable American consumers to keep buying what they're selling. It's been a giant global vendor financing scheme. But if tariffs makes their products much more expensive to Americans, then why bother? They may as well trade with other nations where the consumers are not burdened by the tariff. And so I think that to the extent that Americans are not able to export their inflation to buy imports, the tariffs are going to result in more money staying in the United States, bidding up prices. So instead of using my dollars to buy maybe, a product that was made in China, I have to take those dollars and try to find something in America. And there's not that much stuff that we make. And if all Americans are now taking their money and trying to buy something in America because they can't afford to buy it in China anymore, then all the products in America prices go way up because that's all this extra money chasing those goods. So the net effect of these tariffs is likely to just increase the upward pressure on domestic prices that are already going to be there from the inflation that's being created, having nothing to do with the tariffs.
Now let's talk about the dollar. I've spoken to quite a few guests previously, among other people that you might know, like Brent Johnson from the dollar milkshake theory, and Henrik Zerberg and others that claim that we will witness a last hike or spike in the dollar before it might fully collapse, and as being the cleanest shirt in the laundry, the cleanest dirty shirt in the laundry. Do you buy that? Do you think that this spike, knowing that and considering all of the things that we've just talked about, that there will be buyers of the dollar in this highly dollarized world, still being able to pump the dollar that high up?
Well, I think the spike may have already occurred. I mean, we did have a big run in the dollar after the Fed started hiking rates initially few years ago, and then we had another spike after Trump was elected, and so I think that may have already happened. So it's not a question of do we think the dollar may spike? It may have already spiked. So the question is there another big spike coming? I don't know. I mean, anything is possible, but I wouldn't want to bet on it. I think the odds are the spike is in the past and the collapse is in the future. And the dollar is just likely to go down from here. Now, it's not going to go down in a straight line, but I think the big moves will be to the downside. The corrections that will be smaller will be in the other direction. But the trajectory of the dollar from here, I believe, will be substantially lower.
So you've called this also an American crisis, not a global one. Why do you think the rest of the world will thrive while the U.S. is in a sinking ship?
Well, it's not that I'm saying that the rest of the world is going to get away scot-free. I mean, you got problems in Europe, you got problems in Japan, you got problems everywhere, right? I mean, governments create problems and everybody's got a government, right? So every country's got problems. But in aggregate, the world is going to benefit because if you understand the relationship, the unique relationship that America has with the rest of the world, Americans collectively, we live beyond our means. We spend, or we consume more than we produce. And we borrow more than we save. So there's a big gap there between production and consumption and savings and borrowing. That gap is filled by the rest of the world. The rest of the world collectively does the opposite of what we do. So the rest of the world produces more than it consumes and saves more than it borrows. And so they make their surpluses available to us. We get their surplus goods and their surplus savings, right? So in the short run, we have an improved standard of living. We get to live beyond our means, we get to consume what we didn't produce, and we get to borrow what we didn't save. On the other side, the rest of the world has to diminish its standard of living. It has to produce but not consume. It has to save but not borrow. So all the stuff that we get comes at the world's expense. Now, the world is not doing this out of the charity of their heart. They believe that in the long run, they're going to benefit because they're taking their savings and investing them here, and they're getting a return so that they can consume more in the future. So Americans, we indulge our presence and sacrifice our future, whereas the rest of the world is sacrificing their presence to indulge itself in the future. But the problem is, if we default through inflation, they made a bad deal, right? They're never going to get the future benefit from their sacrifice. Meanwhile, America, well, we're just screwing everybody over. And so my belief is the sooner the world cuts us off and recognizes that this is a bad deal, that living beneath your means now, relying on Americans to pay you back later, is a fool's errand. And so I think when the dollar collapses and the world just basically severs this relationship, now all of a sudden we consume less. Well, that means the rest of the world consumes more. We borrow less. Okay, that means the rest of the world can borrow more because the world has the savings. The world has the production. And so if those are not diverted to us, well, they retain it. So it's like we're just this giant weight that the world has to carry. And if the world doesn't have to carry that weight anymore, well, it's going to be an improvement for the rest of the world. They'll be able to, move quicker without that burden. And so that's why I'm optimistic on balance. Now, of course, not every country carries a proportionate share of that burden. Some countries bear more of it than others, and so those countries will have the most to gain when the burden is removed.
Sorry to interrupt this episode, but I'd like to tell you more about what we do at GoldRepublic. At GoldRepublic, we provide physical gold, silver, and platinum, fully insured, fully in your name, fully allocated, in top-tier vaults, securely saved in Amsterdam, Zurich, and Frankfurt. No paper promises, just real ownership, full transparency on your name. We are fully regulated and conduct regular independent audits of our vaults with more than 700 million euros of precious metals under custody and 70,000 investors that trust us in the last 15 years. Our top-rated app gives you full control. Track live prices, explore detailed charts, and buy or sell in just a few taps. Whether you're hedging against inflation, currency risks, or financial stability, at GoldRepublic, we offer real assets to safeguard your generational wealth. But let's say if the dollar then really collapses, that will obviously have consequences on the debt that is denominated in dollars that is held by all kinds of countries around the world. 1/3 of US Treasuries is held by foreigners.
Yeah. And look, that is why foreign central banks are getting away from the dollar. That's why gold is at $3,550 an ounce, because foreign central banks are buying it and they're selling their dollars to pay for it. So the dollar share of global reserves is shrinking and continues to shrink. And the pace is going to accelerate, especially, if the Fed rules or the Supreme Court rules in favor of Trump that he can fire any FOMC member that he wants because a truly independent Fed is not constitutional. So if that happens, that will just accelerate the exit. They won't be walking away from the dollar. They'll be running.
And to add to that, central banks now hold more gold than treasuries for the first time since 1996. I've just seen this recently on X going by. Is this then for you, or like globally, a quite remonetization of gold, then also led by the East?
Yeah, I didn't see that statistic. I didn't know that it had already surpassed. It probably doesn't surpass all US dollars because foreign central banks hold more than just treasuries. They hold other dollar assets, including, mortgage-backed securities, but other dollar assets. But the fact that the gold now, surpasses treasuries, that's a big deal. And that's going to continue. And a lot of that is not due to central bank buying gold. It's because the value of the gold that they own has gone up so much.
And
the Bank of England sold all their gold when it was less than 1/10 of its current price under Eddie George. I bet they wish they had that gold back.
Yeah. Same for Canada as well. But central banks
Canada
are not
sold too. Not quite as low. Canada sold later, but it was, still much lower than it is today.
Yeah, I think we can all agree central banks are not great investors in general when we look at their return on investment.
Well, at least they're doing the right thing now, some of them. The central banks that have been buying gold over the last couple of years, they've been doing the right thing.
Yeah. So I have it here. It's from Money Metals. The global international reserves in Q1 2025 for gold is above about 25% worldwide. And that's been kind of the same level as more or less, 1990s. And that's the beginning of a trend. A lot might argue. We've also have a historic stock rally that has been happening in the last years, but the gold is up nearly 4 times more than the S&P 500. And when we look at the stock markets, there's only a few stocks, and it's more like tech stocks that are leading this performance, especially since this year. Is this then just a mirage? How would you say that the stock market is behaving or will behave in the coming year?
Well, I think that when you talk about how the stock market has underperformed gold, what you're really saying is that the stock market has gone down. People think it's gone up because they're measuring the value in dollars, but the dollars themselves are losing value. So if you measure stocks in something that has real value, that is not being depreciated, gold, if you price stocks in gold, you see that the real price went down. And that's what's happening, right? It's not so much gold going up, it's that other things are going down. And so now you can buy more of them with the same amount of gold. And I think that's going to continue. I think U.S. stocks are overpriced. The U.S. economy is in a lot of trouble. So are a lot of companies. And stock prices are going to keep falling as they've been falling for the past 25 years. In fact, I think they're going to fall even faster. But at the same time, the nominal price can go up, just like the nominal price has been going up, because that's what happens to prices. When you create inflation, prices go up. That includes stock prices.
So there's been a lot of talks as well about the gold-backed currencies powered by the BRICS. And now recently, this meeting in China from the Shanghai Cooperation Organization, there's been conversations that this has been a really significant meeting and showing a major milestone in the unification of the East or the global South. How does that play into the end game? Do you think that a gold-backed currency basket is something viable that could then challenge the dollar and present an alternative for a dollar-centric world?
Yeah, well, I think there's no question that the world is headed back to a gold-based monetary system. It's the only monetary system that's ever really worked. The one that we have now, that we've had for the past 50 years, has only worked in the sense that we've been able to use it, but it's responsible for these massive global imbalances, the growth of government, the explosion of debt, the high inflation. So if you want to have sound monetary system for maximum economic growth and prosperity and individual liberty, then gold is the only known way of delivering it. So I do think that the world is headed back to a gold standard, and the fact that central banks are buying gold is a recognition that this is in fact going to be happening.
Now, if we look at then gold as an international way of settling transactions, we've seen also the Shanghai Gold Exchange opening up their doors to foreigners. We've seen also China building vaults in partner countries for oil settlements in gold and yuan. In Saudi Arabia, for example, do you see this trend then continuing with gold being this backbone of every of those international transactions, or just a temporary measure?
No. It not only will it continue, as I said, it's going to accelerate, because the central banks still have a lot of gold to buy. And not all central banks have been buying. So I think the central banks that haven't been buying are going to buy, because they're falling behind. I mean, as the price goes up, and if you're not buying it, then you're losing ground to the central banks that are. So it's going to be more like a follow the leader. Now that the banks that got in early, are winning, the track record is going to attract more banks to get in on the game. And then the banks that are already doing it are going to just speed up the purchases, because the more gold they buy now, the more valuable their reserves are later. So it only becomes a FOMO among the central bankers to accumulate gold.
If we look at now the gold reserves, a lot of experts say that China has been heavily underreporting the gold reserves. What is your view on that? What do you think is the real amount in tons that China may hold?
I have no idea, right? But I do agree that it's possible that China has a lot more gold than it lets on. And the reason it may be doing that now, only to reveal the truth later, is because it wants to accumulate a lot more gold before fessing up to how much it has. Because I think, let's say they have a lot more gold and their plan is to keep buying it, that may push up the price. And if China wants to buy as much gold as it can, the goal would be to keep the price as low as possible for as long as it can. So I think if they really show their hand at what they're doing, it may complicate their goal of accumulating more gold at more favorable prices. So they may just be hiding the true extent of their appetite just so they can buy more for less.
Makes sense. I mean, it's kind of when the U.S. government said they would do a Bitcoin strategic reserve. How dumb would that be?
Well,
announcing that you buy something and then buying for a higher price.
Well, that's just the rest of the world is laughing, particularly China. I mean, China banned Bitcoin mining. China knows it's all a scam. The Chinese don't want their people wasting their money on this fraud. So yeah, I mean, the more money America wastes on Bitcoin and crypto, the more gold China can buy. So China is happy to have us squander our resources on fool's gold while it buys up the real thing.
So I have a more personal question. Your son Spencer, he's very pro Bitcoin. How do the let's say family dinners or Christmas dinners go about when you both talk about your favorite assets?
Yeah, he really doesn't have much interest in Bitcoin or crypto anymore. That ended years ago. It was more of a passing fad. I mean, I think he still has some belief systems, but he's not even, he doesn't believe in gold either. He was a gold bug before he got into crypto, but now he's all into AI. And so his personal belief is that AI is going to lead to such an explosion in productivity that nobody needs gold or Bitcoin. So he's just, he's in a different, camp now. And so we never even discuss crypto because it's not even on his radar anymore.
I would like to ask you one question, and it's also from a viewer. If you hate Bitcoin so much, why don't you short it?
Yeah, well, there's a lot of things that I don't like that I'm not short. If I had to take a position in Bitcoin, long or short, I'd probably take short. But, there are so many things that I still want to buy that I think have more upside potential than the downside in Bitcoin. I mean, let's say I concentrate my money shorting Bitcoin and Bitcoin, goes down. I mean, even if it goes to zero, I mean, what do I make? If I short $1 million worth, I make $1 million, assuming Bitcoin goes to zero. But I could buy $1 million worth of gold stocks. I can go to 10 million. So I just would rather buy the things that I think are really cheap and that will go way up than to just sell something that I think is expensive and that is going to go down. Now, obviously, if I can time it, if I knew exactly when Bitcoin was going to go down, that would be a different story. But I don't. I mean, obviously, I've been talking about this bubble for over 10 years. So had I been shorting Bitcoin, who knows how much money I'd have lost if I was doing that. So I haven't done that, because I recognize that it is irrational. And, I don't know how much longer the irrationality is going to last. I mean, do I concede that Bitcoin could go from, right now it's around 107, 108,000 or something like 111,000. Can it go to 150,000? Could it go to 200,000? It could. And if I was short, I'd have to ride that out, right? So I don't want to. But it may not go up. It may go down. And I think it's probably more likely to go down. The only reason it's going to go up is because of all the government push. So I think all the demand is phony based on the Trump administration's help. But what you have to do is think about the fact that if you go back to the peak of Bitcoin in November of 2021, that's before there was a single Bitcoin ETF, before there was a single Bitcoin treasury company, really, before there was a Bitcoin president and a strategic Bitcoin reserve, before you had all these Super Bowl ads for Bitcoin and Bitcoin companies, right? Before the NFT craze and all this stuff that's happened over really the past 4 years. Bitcoin is about 13 to 15% lower today, priced in gold, than it was at its peak in 2021. Why is that? How is that possible? It's only possible because a lot of the people who own Bitcoin have been selling into the hype. Otherwise, the price would be much higher because a lot more people own Bitcoin today than owned it 4 years ago. But the price is not higher, at least not in real money, not in terms of gold. So that there's just a massive distribution going on from the Bitcoin insiders to the general public. And that's being helped not only by the Trump administration, but by Wall Street. So it's in a major scam, and the public is going to be left holding the bag. So I don't like that. I don't like pump and dumps. I don't care if you want to wrap it up and pretend it's like a alternative digital gold and that you don't like the Fed and you don't like cheap money and fiat money and offer Bitcoin as the solution. Bitcoin is not the solution. It's just a new problem in and of itself. You know, people say Bitcoin solves everything. The only thing it solves is if you have too much money. If you buy Bitcoin, it'll solve that problem for you.
All right, clear. I guess there will never be a day where Peter Schiff will change his mind on Bitcoin.
Well, but there will be a day when all the Bitcoin holders change their mind. They just won't have any money left by the time they do it.
So you recently, I'm not sure if you made the comment or someone of your team, but I saw your YouTube page commenting on one of my videos with Lynn Alden about a gold-backed cryptocurrency. So now I'm not sure if you personally did that or a team member, but what's your view on that?
Well, you know, there are quite a few gold tokens that already exist, and there's more in the works. I'm in touch with several of the companies. And yes, it is something that I've thought about doing myself and may ultimately do. I think that tokenizing gold is about the only real use case that you could have for the blockchain right now. I mean, gold lends itself well to tokenization and use as a medium of exchange, you know, because gold is actually money. Gold is a store of value, unlike Bitcoin. So you can base a token on gold, and then people can use that token in commerce. You could pay for things and get paid for things and send and receive gold. I don't have to send you an actual bar of gold or even a fraction of the bar. If I own the gold and I have a token that represents my ownership interest in that gold, I can transfer that token to you. And now I've transferred my ownership to you. And that's what's important. You don't have to have the physical gold in your hand. All you have to do is have ownership of that gold through that token. And of course, you don't even need to do it with the tokenization. There are all sorts of ways that I can electronically transfer ownership of gold or any commodity from me to you. And so that basically eliminates the need for a Bitcoin, because the whole selling point of Bitcoin was, well, how am I going to shave off a little bit of gold to buy a cup of coffee? Well, when you have gold as the basis for a token or anything else, I don't need to shave off any gold from a bar. I just send you, $5 worth of tokens that are backed by gold, and there you go. You got it, and I get your coffee. So it works. You don't need to put your faith into a digital Ponzi scheme to affect that transaction.
But I mean, that would also bring in challenges, right? The fact of being able to audit where the gold is, where it's said to be held, for example. What kind of blockchain would you use as well?
Yeah, I mean, well, the free market takes care of that. You have independent audits by credible firms and things like that. So there are ways for the gold companies to prove that the gold they're tokenizing is actually there. And ultimately, the tokens have to be redeemable. And so if there's a concern that an issuer doesn't have gold, there'll be a run on those tokens, just like there'd be a run on a bank. And then they'd be out of business and nobody would take their tokens anymore.
Now, if we look at gold miners, gold mining stocks are still quite cheap. Why do you think that is the case?
Yeah, I mean, gold stocks are up as a group about, 90% on the year. So they haven't quite doubled. Some of them have doubled. Some of them have more than doubled. But as a group, if you look at the GDXJ, you're up about 90%. But they're still cheap. And they're cheap because investors don't appreciate the value because they don't have confidence in the future gold price. They've always expected gold to crash. I put out a special report in April of this year, the best way to buy gold. And I argued that the cheapest gold now was gold still in the ground, because gold stocks, I said, were so ridiculously priced. given that gold was above 3,000, that it made sense to not even buy physical gold when you could buy gold still in the ground so cheaply. And I was really pounding the table on these gold stocks, and they've since exploded. But even though they've had this big move, I think we're still early in the ultimate move. So people should be buying these gold stocks. I mean, you could get, that report on the company website, Europac.com. You could just download the best way to buy gold. But I have a gold fund, the Euro Pacific Gold Fund. EPGIX is the no load symbol. You can get information about it at my Europac.com. But I think this is a great time to be buying shares of my gold fund. And my fund is available through any discount broker, or you can buy it directly on the Europac.com website.
Now, if we look at silver exactly, where do you see silver going from now, especially now with the gold silver ratio diminishing? Where is that prediction for you?
My short-term target is $50. Right now we're around 40 and just between 40 and 41. But I think that once we get through $50, I think it's going much, much higher. I mean, I think it will easily top 100. I just don't know how high, because again, you don't know how low the dollar is going to go. I don't know how many we're going to print. I know we're going to print a ton of them, so prices are going up. But you don't know exactly how high, because there's no floor to the dollar. The dollar could be worthless, and if the dollar is worthless, well, the price of silver is infinite. But then so is the price of everything. If the dollar is worth nothing, then everything is worth an infinite quantity of dollars. So it's always hard to put a target on anything when you're talking about a fiat currency.
And there's some viewers as well that we asked our viewers what questions they would like to ask, and someone asked if you could talk about uranium stocks or hydrogen, and what's your perspective on this?
Yeah, I don't want to get into specific names. I would just say the uranium story has been playing out for a while. And yeah, the whole premise is based on more energy. The world needs more energy, a lot of it because of AI and the incredible amount of energy consumed there. And also crypto, who knows how much longer that's going to be here. But while it's here, it sucks up a lot of energy. And so the world may, be able to get by some of the political barriers to having more nuclear energy. And nuclear energy requires uranium. And, so there's not enough of it. And the amount of uranium that's needed as far as relative to the output of energy is small, right? So the cost of uranium is not that material to the nuclear power companies, but they need it. That's what's material. So if uranium prices double or triple, the demand's not going to go down. See, a lot of commodities, when the price goes up, the demand goes down. But I think uranium, if the price goes up, the demand won't go down. So that's a very powerful dynamic for a commodity.
At large, if you look at all the commodities, which ones are you then most bullish on in this uptrend?
Well, it's been the precious metals that I've liked the most, and so that's why I've been focusing on gold and silver. But I think, copper, nickel, these other industrial metals look really cheap to me, and I think they're going to go up. Some of the other precious metals like platinum or palladium are still very cheap. But I think other commodities, I think the energy, I think oil and gas are cheap. I think a lot of the agricultural commodities, even though they've gone up a lot, I think they're going up a lot more. So I think it's a big bull market in commodities that really hasn't kicked into gear yet, but that's coming.
All right, Peter. Thanks a lot for your time. I will put, of course, down in the description all the links that direct towards your different companies and your X profile for the trolls that want to troll you a bit more on X.
And don't forget to listen to my podcast, The Peter Schiff Show. It's on YouTube. It's on Schiff Radio. It's all over wherever there's podcasts. And subscribe to my YouTube channel and follow me on X. That's where I do a lot of my posts, real-time posts, my observations to what's happening in the markets, in the economy, with politics. So you want to get my my feed into your X feed, so you get notified every time I post.
Perfect.
And then you can share those posts with your friends.
Perfect. Thanks a lot, Peter.
All right, take care.